Hey, everybody, welcome to the Discount Sunday Outlook Show. The week ahead for April 30th, which is today, to Saturday, May 6th. But obviously, besides crypto, the markets close on May 5th. We're going to take a look at the S&P 500. We're going to take a look at the NASDAQ, the SMH, Russell 2000, transports, Bitcoin, gold, silver, and I even have a high conviction commodity trade for the long-term investor who's looking to perhaps take a trade and sit on the sidelines and watch that thing grow for the next several years. To kick things off first, as always, let's take a look at the S&P 500, or the SPY, which is the proxy for the S&P 500. This is the daily chart. And as always, guys, I just like to keep things short and simple, or short and stupid, the KISS principle. However you want to pronounce it, keep it short and simple, I like to say. Put another way, let's do some common sense technical analysis. All we're going to do here is draw a fib retrace from high to low, okay? And what have we been doing so far? Well, we've been eating time off the clock in between the 382 retrace and the 50 retrace. And it just closed the week above a very important breakdown area. So as you can see, it closed at 415.93. And this candle right here, if I zoom in, which was very telling, right? This was the breakdown candle, the most recent breakdown candle. And the high here was 415.72. There's no accidents. This is 415.93. It closed extremely strong. If we move even over to the weekly chart, okay, it's still above every moving average except for the 50-period moving average. Now, look at how beautifully it bounced off of the 20-day moving average, which is we like to call home base. So it came back, touched home base, and now it closed above that really important spot. And I do have the max upside, at least for this short-term run. I drew this parallel channel here. If we go back to the daily chart, the max upside I have for the SPY on this run, and we're going to look for a sign or signal of a trend change, but for now, the max upside I have on the SPY is this gap right here at about 425 all the way to its 618 retrace. So 618 retrace right here, and it coincides with kind of a double top situation at about 430. That doesn't mean that we're going to short it right away, or at least I'm going to short it right away. But it is something that I'm looking at because also, if you take into consideration this parallel channel that I drew, it's not perfect, but it is kind of telling where the SPY has been chopping around from a daily perspective. If it shoots up and goes into and above 430, that would be an extremely attractive short. You also have, if I go ahead and draw, let's pull out horizontal line here. Okay, you have a really important breakdown box right here. So if it goes up into this area, even above 430, I mean, that is stretching it. But who knows right now? There's a lot of bullishness out there and a lot of people buying up the tape. So if that heads right up into there, guys, that is a short, or at least an area of interest where I'm going to start looking at a short on the S&P 500. Now let's go over to the NASDAQ, the QQQ, right, which is the proxy for the NASDAQ. We had another strong day, and I think the tale here, to be told, is that the NASDAQ and the S&P 500 are leading the charge for everything else, because we're going to go over a bunch of other different charts, and you're going to see that my favorite market leading indicators, which are basically foreshadowers of the future, are lagging, right? So this is the now, this is the present, and this is telling you that people are hitting that bid button. However, what is telling you what is to come are the market leading indicators such as IWM, IYT, which is the transports, the Dow Transports, ETF, gold, silver. So I want to show you guys that. But as of right now, these two, which are the NASDAQ and the S&P 500, are leading the charge, telling you it's a risk-on type of situation. For how long, obviously, is the multi-million-dollar question. If anyone knew, and maybe only the institutions and the high levels know, but we have the charts. So that's all we can do is read these charts and be very structured, methodical, and robotic about it, right? So right now, I have the 50% retrace, 331.50, and that would coincide with where the SPY, if we go back to the SPY, would be interesting to top out at about 430. That said, it could get an overshoot out to about 440. Again, we're just going to have to look and see where it goes from here. But strong close, strong weekly close. You have to respect the markets right now. And there's nothing else to do with the tape unless you want to hop on board, hope and pray it just keeps going. But that's not how I trade. I wait for the setups and then I pull the trigger. Okay, moving on over to the semiconductors, the SMH. So this is interesting. It already hit its 618 retrace, which as you go over to the NASDAQ, it's not there yet, right? It's not even close. The 618 is at about 350 from high to low, and this is still below the 50% retrace. So kind of telling. And I think that, let's just zoom in a little bit here. So you had this bull flag breakout type of situation. If I draw a line here, right? So if bulls, if you're extremely bullish and you want to maybe play some call options, you could certainly play a retrace here, any type of retrace here. And basically the thesis is that since the NASDAQ and the S&P 500 are leading, you're going to be looking for upside up to that 618 retrace, 50% retrace. Now, going over again, so this was leading, and now it's lagging. Nothing crazy, right? It's still in this channel, this parallel channel, like I drew with the S&P 500. Still in this channel, and until we start to see some type of breakdown here, it's still bullish. Everything is still bullish. I don't know if anybody here remembers my previous videos, but to just put it as simple as possible, and let's pull out a trend line tool. So to put it as simple as possible, right, we are in a bull market above this trend line. Right now, obviously, this trend line is starting to dip, go further and further and further away from it. And if we start getting, down around here, it's not going to be looking so good at this point. However, we are in a bull market in this channel above this trend line. So what does that mean again? If we go back to the SMH, well, it was leading and now it's lagging a little bit. Nothing else to do with this chart at the moment, but just something to note that it is lagging a little bit. My two favorite market leading indicators, which are the Russell 2000, or small caps, and then the US Transportation ETF, which is the IYT. These are lagging, which means the economy is in trouble or it's not as in good of condition as the NASDAQ or the SPY, right, are telling you. So heading back over, let's start with the Russell here. Something that I mentioned was if you go back to 2020, this took a long time to break out, which eventually it did, right? But it took a long time and was lagging because the market and the economy wasn't as great as the NASDAQ and the risk on type of products that really just react off interest rates were leading to believe. However, it did end up breaking up. And then guess what? The rest of 2021, when everything else was melting up continuously, it was telling you, I don't really know about that. And then boom, foreshadowed the bear market that happened in 2022. So why I say that is you have the QQQ, and let's just pull back and clean this up a little bit. You have the QQQ leading again. You have the S&P 500 leading again. And you have the banking crisis, which is made up of, or the IWM is made up a lot of these banks. And look how ugly, right? Let's zoom in a little bit. Look how ugly this is from the top, from 2022 bear market down here. I mean, that is just not a good looking chart, right? And then ultimately, when this hits those upside targets, the IWM is basically foreshadowing this to go down lower. Now, how much higher, the NASDAQ could go up and tag this, the 786 retrace up at 375. Who knows? I mean, SPY and S&P 500 could even tag all-time highs or even hit all-time highs. We really just don't know at this point. We're just reading the charts and what the charts are saying. Economy's in trouble from the market leading indicators. Obviously, the banking crisis and then you do have some risk on situations. So the IYT, which is the transportation ETF, you have a pretty cool wedge trend line. You have, let's take a brush out here. You got a little deviation, you got a little deviation. It came up close or it came up short. You have a little deviation. It's going to be interesting to see what comes out of this. Are we going to shoot up and break out when everything else goes? Or is it really just going to chop around? Let me delete that, chop around, and then go down, right? And deviate from there. I really don't know, but it is interesting. I'm keeping this up, and we're going to see how this chart plays out in the next couple of weeks. All right, let's go on over to the all important Bitcoin. So I drew a channel in here again, which I believe is pretty important, at least from a structural standpoint. Of course, obviously the fib levels. So right now we're obviously hovering around the 236 from high to low, 236, and it was a good, like, kind of like a day trade slash maybe multi-day swing short, but that's not really the move you were looking for. If you were short from, there was a CME futures gap right here, and you were short from the 236, you really wanted it to come back down and test that like $25,000 to $23,000 range. But you know how it goes. Everybody's looking for something, and the market's not going to give it to you. What I am looking for a larger swing perspective, if this melts up, right, with the NASDAQ and the S&P 500, we get some type of deviation out into here. That is going to be looking pretty good for a swing short and a reaction in the other direction. So going to be looking for that. Don't know, really hopping on and long at this point, not really of interest to me, at least from a daily chart perspective and spot perspective. I know there's a lot of traders out there like to trade shorter time frames off the hourly, off the 12-hour. But just for me, I just like to keep it from a high level time frame on Bitcoin. So I'll be looking for a deviation out of this range, perhaps even for a long. If this really deviates, touches the 200-day period moving average, I would start entertaining a long. I don't know how it gets there or when, but maybe it's more so like around here. But again, you got to be careful out there. I mean, we do have a lot of issues in the economy. You have the inverted yield curve. You have there's a lot of speculation again. So not saying, obviously we're speculators, but just something you want to look out for. So in this channel, everything is good. Outside, you want to start either taking profits if you're long or looking for new positions. So that's how I'm playing Bitcoin from a daily chart perspective. Going over to gold. All right. So I have a thesis on gold and silver. And it's kind of it's from a macro perspective. So if you look back at the gold and silver ratio, obviously those gold and silver bugs out there understand that silver has been just the bastard metal for so long, for decades. And we're going to be going into a multi-year commodity bull cycle, and it's just in its infancy, in my opinion. And I think gold has a lot more downside to go if we're going to get some type of major correction in the indices. I believe that gold actually still has to come down and satisfy this 618 retrace. It was a big level, and it was not satisfied on the bear market correction. And I believe that it has to get satisfied. And let me just give you my thesis for that. Like I mentioned, the gold and silver ratio, well, gold has been way overvalued in comparison to silver. And let me get rid of that arrow here. If we look at the silver chart, it already satisfied the 618 retrace. It was a major level. I loaded the truck up on physical silver. I had a equity swing position. I had call options on PAAS. So this was a major level. You just buy that level when it comes. I'm going to draw this channel again. I like these channels. So if the gold market sells off, right, and we're starting to see a repricing of the ratio, silver is starting to become more respected, and it's starting to make headwinds as either a currency or a good hedge against inflation. I believe the silver bottom is in. I believe that if we come back down in that correction that we'll see across the indices, that we'll see across Bitcoin, that we'll see across gold, the 50% retrace or the 200 period moving average should provide a great long-term support for silver. And I will be playing silver again if it gets down to that level. And I believe it's about the $21 level. That is absolutely where I'm going to be playing silver very, very long term again. That's going to be like a super long term play, just set it and forget it type of play. So that's my thesis for if we get some type of correction across the board, gold is going to sell off a little bit harder. Now, gold sold off what, about 30% in 2008? If we get even say new all time highs, okay, 30. Oh, let me get rid of that. If we get new all-time highs on gold, let's say 2200 or whatever it's going to be, look at that. 30% down from that area, which is the same drawdown as we saw in 2008, would bring you to that $1,500 level. So again, I'm not hopping on board from a long-term perspective. I'm waiting for these things to come in and play out. That's just what I'm doing. And silver again, even if we get up to, let's say, like 28 in this run, or so let's draw watch this right here. Let's draw a little trend line right here. Look at this. Right? So if we get even a deviation out of here, or let's say it comes back in a little bit, and then we get like some type of deviation here, and let's draw the measurement from high to low. Right? Boom, 30%. Even if it corrects deeper, 37%, or even if it goes up higher, breaks all-time high in this scenario where, the markets are going to melt up. 36%, 40%. That's a normal correction for silver in a correctional phase for the market. So that's what I'm looking at, guys, in terms of long-term for both of these metals. I can't wait to load the truck up once again on these metals. I think we are in the infancy of a extreme commodity bull market. And I want to show you one of my highest conviction bets right now. And I am accumulating, but this right now is forming a bottom. And what is this? This is natural gas. So anybody who's looking to set and forget a extremely bullish and extremely discounted commodity, I am looking for this thing to hit new all-time highs in the next few years. That's just me. If you look at this volume, this is all institutional accumulation. And this thing, at the very least, pivot high to low with a retrace here. Gets back to the 50% retrace eventually someday. Right? That's $20 from 7. All right, so let's do a little measurement here. $20, that's 200%. New all-time highs, 400%. So 200% minimum, at least for me. And then I'll let the rest ride above to 400% new all-time highs. This thing is in accumulation mode. I'm not ever oversized on any one position, but this thing, UNG natural gas, I am accumulating, and I'll be holding for the next few years at least. All right, one last thing I want to show you before we head out, and I know everybody's, looking at this chart like, oh my gosh, not this chart again. But I want to show this because it's really a question, are we in this hope, right, or disbelief type of area of this chart, or are we in complacency? That's really the question, right? Disbelief. This is a sucker's rally. Oh no, like it's no shot, right? And then we're all of a sudden going to get some type of, I don't know, mini melt up, new all-time highs, or are we in this complacency shoulder and it's just going to be another situation where we're selling off? We don't know yet, but these two areas, right? Complacency or disbelief. That's the question. And I'm going to be looking to the charts, right? If we go to the S&P 500, let's remove the drawings. Let's pull up the weekly. Look at that. Pretty interesting, right? Let's do that. Let's do that. What does it look like? Well, to me, right off the bat, pretty damn sure, it looks like complacency, but you just don't know yet, right? It's just not giving you enough to pull the trigger. I want to look for it to get a little bit higher, and I want to look for a sign or signal of a trend change. Perhaps a down day on volume, a doji candle, something of that nature. One more thing I wanted to show, guys, is this chart of bulls and bears. I'd like to see the bulls get into the 60 level, right? Align this up with some indicators, line this up with some timing models, and see the sentiment go super bullish and see the bears get below 20. And that is when I want to start loading the boat on some shorts. So just two things to take a look at, guys. So that's it, guys, for the Sunday Outlook show, the week ahead. Hope you guys have a great rest of your Sunday. God bless and take care.